well. The WPI data, we did see a bit of a flash that is coming in, so we'll wait out for that. The June WPI data has come in at 9.87%, and that's an important update that is coming in here versus food inflation at 6.14% versus 4.49% on a month-on-month basis. We're seeing an increase in terms of food inflation as well. The poll was of 9.38% for the June overall WPI data as well. Let's go across to my colleague Lata, who's here, to break this down for us as well, help us understand what this data actually is indicating now. Lata, over to you.
Well, this is not a good number, obviously. It's almost 10% at 9.87. You're talking about 9.9 really. And the poll was actually more at 9.38, 9.4. The bulk of the numbers were at 9.1 actually, but one reading of 9.75, which was SBI, took the average a little higher. Otherwise, I would have got an even lower average. So SBI really is closest to the guess, which is coming at 9.87. Now, there is no one-to-one correspondence between WPI and CPI, but a double-digit WPI can mean a 5% CPI because some of it does seep in. Manufacturing inflation does make its presence in sooner or later. It gets passed on. When a wholesale price is very high, it gets passed on by the companies sooner or later, and that is bound to have an impact. Now, what do we have here? Primary articles inflation is at 7%. Now, primary articles obviously includes minerals and metals, and those prices have shot up, aluminum in particular, and therefore you've got a 7% primary articles inflation. Manufactured products is 7.48. That was as it was in May. Fuel and power is at 27.4. See, in the WPI, it doesn't go by the prices raised by the government for you and me. It is the wholesale price. So what companies pay in the international market is already priced in. That's why our WPI has been at 8% from the month of April. 8% in April, 9% in May, 9 point something in May, and now almost 10% at 9.9. So it is already, the government's fuel price hike doesn't impact it. It was already impacted by the fuel price hike. The month-on-month rise in food index of 1.6% is not good. Imagine 1.6 into 12. We are talking about, a very hefty increase if it were to be as bad as that, a 7% inflation. Obviously, it doesn't work that way. This is clearly in anticipation of El Nino. Wholesale prices have gone up for edible oils, for cereals, pulses. So that is also getting reflected. It's not a pleasant number. It is not the policy number. So that's the consolation. The policy number is the CPI, which we should worry about, and that at the moment is not bad enough for the Reserve Bank to move. And in any case, the Reserve Bank looks through supply shocks because they can't be controlled by raising interest rates. Only a demand-led inflation, only if it is a price-wage spiral, will the Reserve Bank move. So to that extent, the market is taking this a bit sanguine. But we will have to really wait and see how the West Asia war progresses. Aditi Nayar, Chief Economist at ICRA, is with us to give us her comments. Aditi, we are at 9.9 on WPI. Your first thoughts?
Yeah, Lata, definitely, as you said, a very unpleasant number. We had a forecast which was lower than this, and this number is absolutely not pleasant, as you said. Food inflation has come in a little higher than we expected. Typically, in the months of June, July, August, 1 to 1.5% month-on-month increases are quite par for the course, and 1.6% is a little higher than what we had penciled in for the month-on-month food increase. But this is definitely one of the areas that we need to keep a watch on. What happens with the monsoon deficit, the lull which has happened recently after the deluge that we sort of had at the beginning of the month should set us up for a good jump in sowing when the next round of the sowing numbers comes in. But otherwise, perishables, etc., we'll have to keep an eye on the entire food pack in the next few weeks.
Sorry, go ahead.
And of course, West Asia, just as we thought that, things are settled, crude is back below 80, now it's crossed 80 again, so that's the other sort of uncertainty to watch out for.
Yeah, sorry, why I was intervening was to look at the positive, which several economists pointed out yesterday at CPI also. A high WPI also means a high nominal GDP. A high nominal GDP means better tax buoyancy. So, are you upping your nominal GDP forecast?
Lata, let's first start with the real GDP forecast. It's kind of going all over the place. 1 week the numbers seem like we should push up our forecast. The next week again something happens that suggests that maybe we need to be a little less optimistic. So we are going to be somewhere in the region of, I'm going to give you a broad range, 6.2 to 6.7% for the real GDP, depending on where the monsoon and West Asia finally end up. And on top of that, we're looking at CPI inflation that's again going to be in the range of, let's say, 4.7 to 5%, maybe a little higher if the monsoon really turns out to be terrible. And then the WPI after that, we've got data on a new base. We kind of do need to watch out for how it behaves. But broadly, I would say the nominal GDP is probably going to end up in the range of 12 to 12.5% this fiscal.
Yeah, I think I even heard a number 13% yesterday when we were discussing CPI. So the government in its budget has factored in only 10.6%. So if you get a 13% nominal GDP, that gives you that much more elbow room to have a higher fiscal deficit. It's not a great deal, maybe a 10,000 crores more or something, but it gives you that elbow room because it is not 4.3% of, say, 357 lakh crore. It is 4.3% of 360 lakh crore or 365 lakh crore. So that gives you a little more elbow room in terms of fiscal deficit. That's perhaps the advantage. Aditi, thank you very much indeed for joining in and giving us an idea. I guess as you get into the numbers, you will have a better idea of where the inflation numbers actually come. Actually, they've also giving us now a producer price index. And the producer price input index has actually risen very sharply to 107 from 104 in May. That means input prices have risen. Whereas output PPI has been more stationary, 109.9 compared to 109.6. So just 30 bips. That means margins have shrunk. Your raw materials have gone up, but your output has not gone up. GVA shrinks. So that is GDP negative or GVA negative. But this is just an experimental number. We don't know to what extent it will be used by the MOSPI in the GDP calculation. Suffice it to say now that WPI is a little higher than expected, but it may not impact the Reserve Bank's thinking because it's, CPI that they track.
All right, Lata, well, absolutely. That's on the June WPI data at around 9.87% is where it's coming at. The core inflation above 7% this time round as well. But the other niggling worry which seems to be coming back on board, Lata, is the rupee. It's breached 96. The last time we saw a level above 96 for the rupee was all the way back on the 22nd of May. Tell us more.
Well, the rupee has been down for 2 consecutive days. It was down about 0.3% yesterday and plus a 0.6% today. So we are almost looking at a 1% cut this week. July 10th, when we closed the week, we were at 95.3, now staring at 96.1 plus. It even touched 96.17 intraday low. Now the fall is obviously entirely due to the war and due to the crude price at 85 and dollar index also striding higher. Now, what we need to see is the market positioning. As you pointed out, up until last week, we were at 94, at its strength, the rupee had even seen 94.5. This led a lot of importers to remove their hedges, and it led a lot of exporters to come and forward sell their dollars. Now in this last 48 hours, there is complete panic because everyone is short dollar and long rupee. So they're coming and aggressively hedging. Importers are coming and hedging, that is buying dollars, and exporters are coming and unwinding their sales, which they did earlier of their dollar positions. That has led to this sharp 1% rise. The Reserve Bank apparently is in the market, but people are not looking at it as aggressively protecting any level. And the other thing that's a niggling worry, which is just a speculative worry, is yesterday the finance minister met all the PSU banks, and today the governor is meeting all the banks. So the worry is, and we know Sapna reported that they spoke about FCNRB scheme and what is the arrangement. So is the RBI a little worried that FCNR deposit flows are a little slower than they would like? So that adds to the market's positioning, adds to the market's hyper worries. All that is impacting the rupee. It is in the last 2 days one of the worst performing currencies. But to be fair, up until July 8th, it was one of the best performing currencies.
Okay, all right. Thank you so much, Lata, for that comprehensive breakup first on the WPI data and then on the rupee. Both worrying figures for now. But we'll slip into a short break. When we come back, we'll connect with Satvik Energy Management as Motilal Oswal has initiated coverage on the stock. That and a lot more on the other side.